Can we start once again, everyone? Okay. Now, so we'll start with AS20, simple accounting standard, only based on calculation. Okay. Let us revise fast. Now, you all know that AS20 says EPS calculation, EPS are of two types, basic and diluted. Now, basic earning per share is calculated for ordinary equity shares, means equity shares, and diluted earning per share is calculated for both equity shares and potential equity shares. Okay. Now we'll discuss about diluted after basic earning per share. The basic earning per share, what is the formula? Formula is net profit or loss attributable to equity shareholders divided by weighted average number of equity shares outstanding during that period. It means we need to find out numerator and denominator. The first numerator, how to calculate numerator? So we'll take profit or loss as per SOPL. So when I say profit or loss as per SOPL, it is profit after tax. And profit after tax means profit after extraordinary item, profit after exceptional item, means as per SOPL, correct? So we'll take profit after tax. From that we'll deduct preference dividend. Now preference dividend can be of two types. One is for cumulative preference shareholders, one is for non-cumulative preference shareholders. So for cumulative preference shareholders, preference dividend will be deducted whether it is declared or not declared. Means even though it is not declared, will deduct it for the calculation of EPS. For the calculation of EPS. But for non-cumulative preference shareholders, it is deducted only when it is declared. Means if not declared, there is no need to deduct it. Okay. If question is silent, always assume it is cumulative preference shares. If question is silent, always assume it is cumulative preference shares. Then whatever balance profit, that balance profit is available for equity shareholders, and this will be used to calculate basic earning per share. Okay. Yes, sir. Now a simple example, if I say example, suppose profit before extraordinary item and before exceptional item is given, but after depreciation is given 75. So depreciation, no adjustment required because this is profit after depreciation. So this is no adjustment required. But any VRS payment is an exceptional item. So any VRS payment will be deducted because can you say we want profit after extraordinary, after exceptional item. So 75 minus, we will do 30, we'll do what? 30.10 na? Correct. So minus 30.10, how much? Whatever is. Then minus loss due to earthquake. This is extraordinary item. This will be also deducted. Then minus tax will be also deducted. Then minus deferred tax will be also deducted. So this is coming how much? 27.90. Then they give paid up equity share capital, paid up 10% cumulative preference share capital, and paid up 12% non-cumulative preference share capital. So can you say we'll deduct only dividend of cumulative because nothing is given, we'll assume it is not declared, correct now. So we'll deduct only for cumulative. So cumulative is 50 into 10% means 5. So we'll do 27.90 minus 5, how much? 22.90 divided by number of equity shares. Number of equity shares will be, because it is rupees 10, so it will be 9.3. So what is the basic earning per share? We can find out. Understood? We can find out. Chalo. This numerator you have understood. Now let us come to denominator. The denominator is what? Weighted average number of equity shares outstanding during that period. Now for calculating weighted average number, means to find out weighted average number of shares, we use time weight. Time weight means what? For how many days, yeah, for how many months equity shares were outstanding during that period. To be applied time weight. Now the question is that time weight will be from which date? So it will be considered from a date when the consideration is receivable, not received. Means from the date the consideration is receivable from equity shareholders, from that date we will take the time weight, correct? So for example, equity share issued and the date of receivable is 1st May and it was received on 1st June, but the weight will be taken from 1/5 to 1 June. 1/5, it will be taken from 1/5, but from exam point of view, Normally the date of receipt and date of receivable will be same. Till now this type of question they have not asked, but this question is very popular for theory question. Normally they ask this question, they will give you some example and you should say from which date it will be included in weighted average number of shares. For example, issue of equity share in cash included when the cash is receivable. Issue of equity share on conversion debenture included from the date of conversion. Issued in exchange of liability included as of the date the settlement become effective. Settlement it become effective means once the liability become equity share, that the date when it become effective, the date which it become effective, from that date will include in the weighted average number of equity shares. Issued in lieu of interest or principal on other financial instrument, to included from the date when the interest ceases to accrue, means the from date when the interest ceases to accrue, from that date it will be included in weighted average number of shares. Issue of equity share for acquisition of asset, means you acquired asset and you have issued some equity shares. So it will be included when the acquisition is recognized, means when you have recognized the asset in your books of account, from that date it will be included in weighted average number of shares. Issue of equity share for rendering of services from a date when the services are rendered. Issue from amalgamation from a date of acquisition. So this can be one 5 marks question. They have asked many times theory question regarding this. Correct? Yes, sir. Now let us take one question for calculating weighted average number of shares. This example number 3 will take. So you can see 1st April 2001 opening balance is given, outstanding number of shares 1 lakh. Then on 15 June issue of equity shares 75,000. Then 8 November conversion of convertible preference into equity shares. Then 22 Feb buyback of equity shares, and this become closing number of shares. The closing number of shares is not relevant. Closing number of shares is not relevant. Now whenever they have given this date 15 June 8 November, we will always calculate number of days, not number of months, because it is not exactly equal to month. So can you give me first, this will be into 365 by 365, but now we'll take from 15 June to 31st March. How many days? First 15 June to 31st March. You know this na calculation. 15 June to 31st March, how many days? 289. You have counted 15 June, you have not counted. Means you have considered 15 June, you have not considered. So you should consider it. 15 June will be considered. So it will be 290 days. So it will be 290 divided by 365. Then 8 November to 31st March. 8 November 31st March. $144. This you have counted now. 144 divided by 365. Then 22 Feb buyback from 22 Feb to 31st March. 38 to into 38 by 365. So what will be your answer? Batao. So buyback you will minus, huh? Buyback you will do minus. What is the answer? This much time. Hmm? 38. You also write down now. How much? This much time will take. 1,77,700 342. This is correct na? Bolo, correct or wrong? I think correct only. Done? Is what you are doing. Means you are doing 1 lakh into 365 divide by 365. It will be 1 lakh. Then 75,000 into 290 divided by 365. How much? 59,000. 59589. Okay, sir. Then we have 20. How much? Then 50,000 into 144 divided by 365. How much? 19,726. Then we have 20,000 into 38 by 365. How much? 19. This will be minus na. So what is the total? 177. Huh? 38 or 365? 38 is how much? 3? Now, what is the answer? 1,77,233. Understood. Chalo. Okay, sir. Now everyone getting? Okay, sir. Chalo. Now this weighted average number of shares depend upon some information. So there are 3 types of questions which are important. First, they may give some question with partly paid up shares. Now, whenever they are partly paid up shares, so we need to convert partly paid up shares into equivalent number of fully paid up shares for the purpose of EPS calculation. For example, the basic earning per share, if the net profit is 3 lakh, net profit is given how much? 3 lakh. Now, opening date, how many equity shares outstanding? 20,000. Now, on 30th September, they have issued equity share rupees 10 is rupees 6 paid up. So, what we'll do? This is partly paid up shares. So, we'll convert this into fully paid up shares. So, how to convert this 10,000 partly paid up shares into equivalent number of fully paid up? So, we'll do into 6 divided by 10. So, 6,000 will be equivalent number of fully paid up shares. Similarly, on 1/1/2007, on this 2 rupees extra rupees, 2 rupees call money received. So you receive 2 rupees call money. So 10,000 into 2 by 10 will do. So this becomes 2,000 equivalent number of fully paid up shares. Now this is outstanding for 12 months. This is outstanding for 6 months. And this is outstanding for 3 months. So what will be your answer? Batao. So it will be 3 lakh divided by what? 20,000 into 12 by 12. 12 by 12 na. So 3 lakh divided by 20,000 into 12 by 12 plus 6,000. 6,000 na. Into 6 by 12 plus 2,000 into 3 by 12. This will be your answer. Now you can solve it now. So this will be your basic earning per share. Understood? Whatever answer is coming. This you have understood. Now we'll not concentrate on answer because I am getting different answer. Time is wastage. This numerator denominator understood? Correct? This my focus is numerator denominator. Answer so you can calculate. ठीक है ना? Understood why 6,000, why 2,000? Got this point? So we converted partly paid up shares into equivalent number of fully paid up shares. This is when partly paid up shares are there. Now, this they don't ask. Now come to issue number 3. Whenever there is a bonus shares, correct? So whenever there are bonus shares, so what our AS20 says that weight will be taken from the beginning of the year, means for 12 months, always 12 months, means date of bonus share is not relevant, and we need to also restate previous year EPS. We need to also restate previous year EPS for comparison purpose. Understood? This is the fact. I hope you know this point. Let us take one example. We calculate the earning per share. Number of equity share outstanding is how much? 20,000 on 1st Jan 2001. Then they were given on 1st October 2002, means the next year, a bonus of 1 equity shares for every 2 equity shares outstanding was given. So it means 10,000 is the bonus shares. The net profit of previous year how much? 5 lakh. Net profit of current year is how much? 6 lakh. Correct? So in this, correct. So in this first, if we calculate basic earning per share of previous year was 2001 now. Means if I do for financial year 2001, so what is the net profit? And what is the outstanding number of shares? Only 20,000. So this become how much? 25. But if I come to financial year 2002, so what is the basic earning per share for 2002? It will be how much? 6 lakh. What is the number of shares outstanding from the beginning? 20,000 into 12 by 12. Then how many bonus shares? 10,000. For this weight will be what? 12 by 12 only. So date of bonus is not relevant. It will be considered that way available from the beginning of previous year. Not only current year, previous year also. Correct? So this will be 6 lakh divided by 30,000 how much? 20. Understood? Correct? Now we need to restate what? Previous year EPS. So in the current year financial statement, in the previous year column, we restate the earning per share. So we write down restated basic earning per share for which year? 2001. So we'll say 5 lakh was the earning divided by 20,000 plus 10,000 will give the bonus impact. How much? So 16.67. Correct? So these are not comparable. This is not comparable. This is comparable. Understood why? Because bonus is without any consideration. So because bonus is without any consideration, so your profit will not increase because of that. So you can see कि if 5 lakh was the previous year earning and 6 lakh is the current year earning, so earning per share should increase. But due to bonus it decreased. So this is not comparable. So to make it comparable, we have restated the basic earning per share of previous year. Understood? So this is bonus share. Only this is the question. This one question is more than enough to understand. Bonus share is out of profit only. Huh? What is this numerator? Numerator is what? Batao. Today, abhi de. Numerator means what? Numerator means what? Numerator means PL from as per SOP only deduct what? Preference dividend. Any other adjustment is not required. Understood? ठीक है? चलेगा? So your numerator is only this. No more adjustment. Suppose they have given good question only. Sometimes this type of question will be doubtful if they ask this type of question. Suppose they have given in the exam that there is a mandatory transfer of profit to a statutory reserve. Correct? So during the year you have transferred some profit from PL account to statutory reserve. So whether it will be deducted to calculate numerator? No. So any transfer to statutory reserve or any other reserve is not deducted. Only what you deduct? Preference dividend. Understood? Correct? Can we move? Yes, sir. It is given. देखो, I'm not reading each and every point. Any appropriation reserve means bonus share also will not be deducted even if such transfer is mandatory. Understood? Chalo. Okay. I have limited time now. Okay. Chalo. So this you have understood. आगे चले. Now for equity shares, which are issued by inadequate consideration. So there is only one example, right shares. Right shares are issued for inadequate consideration. ठीक है ना? First, you know about the calculation this. Actually, that calculation is थोड़ा सा technical calculation. But first, let me give you concept. Once you have this concept now, then I will explain the technical part also. So you can understand technical part only once you have understood the concept. So what they want to say, कि whenever there is a right shares, so right shares means what? You have issued some shares to existing equity shares at a price, suppose 20, even though market price is what? 50. So it means right shares are issued to the existing equity shareholders at a price lower than market price. Means to public it has been, if the same share would have been issued to public, then the shares would have been issued at 50. So what our AS20 says that for calculation of earning per share, it has two elements. One is known as paid element, one is known as bonus element. So if the suppose equity shares would have been issued at fair value means market price, then how many shares would have been issued? So we'll say 1 lakh. How much consideration received? 20 divided by what? 50. So how many shares would have been issued? It means 40 for 40,000 shares. Can I say entire fair value has been received? It means can I say for 60,000 shares no consideration has been received? No consideration has been received. So this is known as bonus element. This is known as paid element. This is known as bonus element. This is known as paid element. Understood this point? So it has two parts, bonus element and paid element. So bonus element will be considered to be issued from the beginning of previous year. Means weight of bonus shares will be taken from the beginning of previous year and previous year EPS will be restated. But the weight of these will be taken from the date of right issue. This is the concept. Concept have you understood? Now the question is that what is this price? 50. So this 50, what AS20 says that this will be not market price, this will be calculated theoretically. To calculate it theoretically, it is nothing but intrinsic value. It is not market price, it is intrinsic value. So they have given one name, it is theoretical X right fair value of shares. So you need to use this term only. You can't write down intrinsic value in exam. However, this is nothing but intrinsic value. So we should write down theoretical X right fair value of shares. Now what was the intrinsic value in amalgamation chapter we have done? Batao. What was the formula? All asset at fair value, all liability at fair value. So there will be net asset available to equity shareholders divided by number of equity shares. Correct? So can you say if I am saying net asset at fair value, it is nothing but equity at fair value, means equity is equal to net asset. So they have calculated this by taking equity into consideration. So what formula they have given? They have given fair value of equity shares before right. Fair value of equity shares before right plus right issue proceeds. Why? Because it is X right means after right. So after right shares, what is the total number? What is the total net asset? So can you say your net asset will be increased by the proceed received from right? Cash will increase, so that will be added. Divided by number of shares, total number of shares after right. This is the formula. Understood? So we need to first find out fair value of equity shares before right. Means pre-right fair value of equity shares. Fair value of equity shares before right plus proceeds from right issue. That is nothing but net asset fair value divided by total number of shares after right. Total number of shares after right. Because we are calculating X right, therefore we'll take total number of shares after right. So this become what? X theoretical X right fair value of shares. So if you have calculated this, can you say this will be given the question? This will be given the question and this will become theoretical X right fair value of shares. So you have calculated what? Paid element. Once you have calculated paid element, you can find out bonus element. Once you have calculated bonus element, bonus weight will be given from the beginning of previous year. Weight of paid element will be given from the date of right issue. This is the concept. Concept you understood? So first I will do as per concept. Then I will go do as per ICI, means as per AS20. Understood? Are you able to understand? Let me take one question. Calculate the earning per share. Net profit of previous year is 5 lakh. Net profit of current year is 7 lakh 50,000. Number of equity shares outstanding at the beginning of the previous year is 2 lakh. On 30th September 2006, means current year, right shares were issued. One new equity share for each 4 shares outstanding. Means 50,000. Can I say 50,000? 2 lakh into 1 by 4. So how many right shares issued? 2 lakh into 1 by 4? 50,000. Right issue price is 23 and fair value of one equity share immediately prior to exercise. Means this is pre-right fair value is given. Means what is the fair value of equity share before right is given? Pre-right fair value of share. So prior to exercise of right means pre-right fair value of shares is given. Question you have understood? Correct. So first we'll calculate what? Theoretical. First we'll calculate theoretical X right fair value of shares. But what is the number of shares before right? 2 lakh. What is the pre-right fair value of shares? 30. What is the number of right shares? What is the right issue price? 23. Understood? So this is the pre-right fair value of shares plus proceed from right divided by number of shares after right is how much? 2,50,000. So this becomes theoretical X right fair value of shares. This becomes theoretical X right fair value of shares. Correct? What is the amount coming? 28.60. 28.60. Okay. Always whenever you're writing a 0.6, to write down 2 decimal always. That is the right presentation. ठीक है ना? So don't write down 28.6. Always write down 0. ठीक है ना? Suppose 28.66. So it becomes 67. So write down in this way. Don't write down 3 decimal, 4 decimal. Always write down 2 decimal. Okay. Now we'll calculate what paid element. What is the formula for paid element? Batao. Means how many number of shares which are deemed to be issued at fair value. So we'll say what is the right share 50,000 into 23 divided by what? 28.60. So this is the number of shares which are deemed to be issued at fair value. Deemed to be issued at fair value. How much? 40,210. So what is the bonus element? Batao. Bonus element is what? 50,000 minus 40,210. How much? 9,790. This is the bonus element. Understood? This formula have you understood now? Correct. So total proceeds divided by theoretical X right fair value means the number of shares which are deemed to be issued at X right fair value. Correct. So this become bonus element. This become paid element. Chalega. Now for this weight will be given from the beginning of previous year. For this weight will be given from the date of right issue. Now we can calculate. Correct. But the basic earning per share. Basic earning per share. First we'll do for previous year. The previous year is 5,6. First we are doing for 0506. So 0506. What is the earning? 5. Earning is what? 5 lakh. And how many shares outstanding is 2 lakh? So what is the basic earning per share previous year? 2.5. Now I'll come to current year 0607. So what is the basic earning per share of 67? It is, what is the earning? Earning is what? 7,50,000. Divided by 2 lakh is outstanding from the beginning. 12 by 12. Then what is the bonus element? 9790. This is also outstanding from the weight will be taken from the beginning only. Then what is the paid element? 40,210. For this weight will be taken from the date of right issue. So when it was issued on 30th September, means 6 months, weight will be taken for 6 months. Understood? You can calculate this. Okay. Have you understood this point? Answer? How much? 3.26. 3.26. Now we need to also restate what? Restated basic earning per share of previous year. So we will take 5 lakh divided by what? 2 lakh, and we will give bonus effect. Bonus effect means 9790. How much? 2.38. Understood this too? Now in this type of question, even though question is silent, we need to restate previous year EPS if they are given previous year earning. Even though question is silent, if they are given previous year earning, we need to restate previous year EPS. Understood this? But ICI is not solving in this way. How ICI is solving, let us understand, because you need to solve in that way only. First concept you understood. Now once you have understood concept, now you can retain that. This too you have understood now. Easy to understand. Now, correct. So what ICI is saying, कि first calculate what? First calculate theoretical X right fair value. That too you have understood. Then you need to calculate one right issue factor. So right issue factor will be market price before right, means 30 rupees, divided by theoretical X right fair value. So we call it right issue factor. Right issue factor. So in our question, what is the right issue factor? 30 by 28.6. How much it is? This is your right issue factor. Understood? Now 30 point, you can add on this 30 by 28.6. You don't what? Do it. Understood? Now, batao. How many shares were outstanding beginning? 2 lakh. Then on 1st October, na? What is the date? 30th September. On 30th September, 50,000 right shares issued. Means here the total number become 2 lakh 50,000. 2 lakh 50,000. Understood? Have it is this point. So what they are saying, how to calculate weighted average number of shares. So 2 lakh is outstanding, is our first outstanding for how many months? Okay, 6 months. Is outstanding for 6 months. Then 2 lakh 50,000 is outstanding for balance 6 months. Correct. So 2 lakh into 6 by 12 into will multiply by right issue factor. What is right issue factor? 30 by 28.60. How much? How much it is coming? One lakh 4,895. Then 2 lakh 50,000 is inclusive of right, inclusive bonus, will be multiplied by 6 by 12 without right issue factor. This is coming how much? 1,25,000. What is the total of these two? 2,29,895. What was the earning per share? 7,50,000. Divide by 2,29,895. What is the answer? Same answer is coming or not? Same answer is coming. Understood? So ICI is doing in this way. So I will say follow ICI solution. Can you do it this way? But in this, you need to do in this way. First 6 months and then 6 months. Are you able to understand? First 6 months, then 6 months. Are you able to understand? But high chances of mistake. There's a high chance of mistake. So if you forget and then apply my method, that is easy to apply. You will never do mistake in that. Understood? Okay, sir? Yes, sir. Okay. I hope you have understood. Can we move? Can we move? Yes, sir. So this is given as a pura in this. Acha. What was our previous year EPS? 2.5. If you multiply by reverse of right issue factor, what was the right issue factor? So multiply by 28.6 divide by 30. What is the answer coming? 2.38. This answer came. Understood? So if you multiply previous year EPS with the reverse of right issue factor, your restated EPS will come. Your restated EPS will come. So you can do in exam in this way, because ICI is following this, because AS20 has given this only, but the concept I have given. What we are doing, that is the concept. Okay, sir? Okay, chalo. थोड़ा सा हाँ difficult to retain, but important from exam point of view. Important from exam point of view. So either they will ask bonus share question, or they will ask right share question, or they will ask partly paid up shares question. Apart from this, they are not asking any question in basic earning per share. Huh? Conversion? अरे भाई diluted है. अभी we are in basic. अभी we are in basic earning per share. I think in basic earning per share they are asking bonus share, या right issue share, या partly paid up share. Not more than this. चलेगा? Now let us come to diluted. Now diluted earning per share means whenever there are potential equity shares, then we calculate diluted earning per share. So what are potential equity shares? Any financial instrument which have potential to become equity share in future, that are potential equity share. For example, convertible debenture, convertible preference shares, or any employee stock option plan. Any employee stock option plan. From my point of view, previous in old scheme of syllabus we have ESOP as a chapter. So then they used to ask ESOP for AS20, but now they should not ask, because ESOP is deleted from our syllabus, but they are asking what to do. Correct now? So I need to explain ESOP also for AS20. ESOP for AS20. So there are three type of questions which can be asked. One is, so they are asking for convertible debentures. This is the most favorite question. Correct. So let me take that one question of that. Mohol Limited has equity capital of 40 lakh consisting of fully paid equity shares of ₹10 each. The net profit for the year is 60 lakh. So first, what is the basic earning per share? Basic earning per share 60 lakh divided by what? Divided by 40 lakh. Now 4 lakh, sorry. Divided by 4 lakh. What is the basic earning per share? 50 ना 50 15 बोलो 15 saying 50 15. Okay, now it has also issued 36,000 10% convertible debenture of ₹50. Each debenture is convertible into 5 equity shares. The tax rate is applicable 30%. So what our AS20 says, that whenever potential equity shares will be converted into equity share, numerator will be also affected, denominator will be also affected. Means this profit whatever we have calculated for basic earning per share, that is after interest expense. But once convertible debenture will be converted into equity share, they are not entitled to interest income. So therefore you should add back what? Interest expense. Correct? And can you see interest expense is always charged before tax. So whenever you are adding interest expense, that should be net of tax. That should be net of tax, because every expense has some tax benefit, that you know now. I think FM also you have done that. Whenever you are adding expense should be added net of tax. Understood? So in this, can you say numerator we have 60 lakh. In this we'll add interest. So interest is how much? It is 36,000 into 50 into 10%, how much? 36,000 into 50 into 10%, how much? 1 lakh. But we'll take net of tax. What is our tax rate? 30%. Therefore, we'll multiply by 70%. So we'll take only 70%. So what is the numerator? How much? The total 60 lakh plus this. कुछ भी बोलते हो. 61 lakh 26,000. This become numerator, not denominator. Can you say our basic earning per share denominator was how much? 4 lakh. But due to conversion of potential equity share into equity share, number of equity share will increase. Now we'll get 36,000. Each debenture is converted into 5. So 36,000 into 5, how much? 1 lakh 80,000. So it will 4 lakh plus 1 lakh 80,000, 5 lakh 8,000. This become your numerator and denominator for diluted earning per share. So what is the diluted earning per share? How much? 10.56 will be diluted earning per share. Understood? Chalega. So one this type of question they are asking. Correct? Have you understood? Let me ask you one question. Yeah, let me take one question from book only. A very good question we have. This is the question. Question 13. Calculate basic and diluted earning per share. They have given net profit for the current year how much? 85 lakh 50,000. Number of equity share outstanding how much? 20 lakh. Number of 8% convertible debenture or rupees 100 each, 1 lakh. Each debenture is converted into 10 equity shares. Interest expense for the current year is 6 lakh. Tax relating to interest expense 30%. Similar question. Now in the last question, just try to understand what we have done. Whenever question is silent, always we'll assume debenture was also outstanding from the beginning. And therefore for the number of equity share which is converted from debenture, we have taken 12 by 12 weight. That was understood. If the question is silent, always will take 12 by 12. We'll always assume it is outstanding from the beginning. Are you able to understand? But in this question, just try to understand what they have given interest expense for the current year. This is the indication to calculate something. And what is the rate? 8%. Now, if you calculate interest expense for the entire year, it will 1 lakh into 100 into 8%. How much? 1 lakh into 100 into 8%. How much? 8 lakh. Means for the 12-month interest expense, how much? 8 lakh. But they have given interest expense how much? Means it is understood fact that debenture is not outstanding for 12 months. Debenture is outstanding for less than 12 months. So batao, interest expense of 6 lakh will be for how many months? You can do heat and trial method. Do 10 by 12, then 9 by 12 like this. In which you are getting? 9 by 12 you are getting now. 8 lakh into 9 by 12 how much? 8 lakh into 9 by 12, 6 lakh, means 9 months. It is outstanding for how many months? 9 months. So therefore it is understood fact that it is outstanding for 9 months. Now can you take 12 by 12? No. Understood. So similar question but interesting question. Dekho, this have been asked 2 times in exam and have been given RTP, MTP many times. So this type of question can be asked. So but the first basic earning per share will do. So basic earning per share will be 85 lakh 50,000 divided by 20 lakh. How much? 4.27 या 28 कर दो 28. Understood. Now let us come to what? Diluted. So we'll do 85 lakh 50,000 plus what? Can you say plus 9 lakh? But net of tax. What is the tax at 30%? So you will do 70%. This will become what? Your numerator. Correct. And denominator will be 20 lakh plus how many number of debenture? Each debenture is converted to 10 equity shares. So 1 lakh into 10, how much? So 10 lakh. But you will give wait for how many months? So you'll do 10 lakh into 9 by 12. This will be your answer. Understood? Have you understood this point? What the answer is coming? Check karo. हाँ. Numerator why 9 lakh? 9 lakh was the interest expense na? Oh sorry, 6 lakh. Sorry, 6 lakh. 6 lakh, my mistake. 6 lakh. Now okay? What is the answer? 3.26. Let's see what is the answer. 3.26 correct. 3.26 correct. Understood? Good question. Means if you would have taken 12 by 12, your answer would be wrong. Okay? Let me ask you one question. Thoda sa, I am just creating one question. You'll say what to be done. Okay? Let's see how many of you are doing correct. Suppose the number of equity shares outstanding from the beginning was 2 lakh. Okay? This was the equity shares outstanding. Then we are having 10% convertible debenture of rupees 10 lakh. 10% convertible debenture of rupees 10 lakh. And this will be converted into 1 lakh equity shares of rupees 10 each. This will be converted into 1 lakh equity shares of rupees 10 each. And on 31st December, this was actually converted. Means on this date it was converted. It was converted. Understood? And the net profit for the entire year, net profit for the entire year is 5 lakh. Net profit for the entire year is 5 lakh. And the tax rate is 30%. Tax rate is 30%. One hint I will give. Hint is what? Can you say it was potential equity shares for how many months? 9 months. And this become ordinary equity share for how many months? 3 months. So for basic earning per se, this 1 lakh will be included for how many months? 3 months. And for diluted earning per se, it will be included for how many months? 9 months. Hint I have given Dubai row. Understood the question now? Question you have understood now? Once more. I said 2 lakh equity shares were outstanding from the beginning. This was the ordinary equity share. Then there were 10% convertible debenture of rupees 10 lakh, which will be converted into 1 lakh equity shares of rupees 10 each. and it was converted during the year only. On 31st 12 it was converted into 1 lakh equity shares. So I said that for 9 months it was potential equity shares and for 3 months it was ordinary equity shares because it was already converted. So for 3 months it will be included in basic and for 9 months it will be included in diluted. And the net profit I have given 5 lakh. Do. So it means for basic what will do? Batao. For basic earning per share, what is the net profit I have given? 5 lakh divided by 2 lakh outstanding for how many months? 12 by 12. And can I say plus 1 lakh? This will be outstanding for how many months? This will be outstanding for 3 by 12. How much? 2.22. This you have understood? Then we'll come to diluted earning per share. Diluted earning per share will say 5 lakh plus interest expense. So interest expense will be 10 lakh into what? How much percentage? 10%. For how many months? 9 by 12. And what is the rate of tax? You will take 70% net of tax. Understood this? So interest will be also calculated for 9 months. Divided by what was the this? What was the total of this? What was the total of this? 2 lakh 7 2 lakh 25 na 2 lakh 25,000 plus will give the weight 1 lakh for how many months? 9 by 12 because 3 by 12 already included, so only to give the weight of what? 9 by 12. Understood? So this will be your diluted earning per share. Understood? Have you seen why I have taken 9 by 12? Always, whenever you use two diluted earning per share, na, the numerator as per basic will be adjusted, denominator as per basic will be adjusted. So the starting point will be this only. Starting point will be this. Understood? Correct? Understood. And you can see this is nothing but 2 lakh and this is 75,000, 25 plus 75,000, 1 lakh only. So 1 lakh has been also taken for the entire 12 months. So that will be automatically adjusted. Okay. Understood. So this is one type of question which they may ask for debenture. 1.84. Okay. Chalega. Second question, what they are asking? They are asking for ESOP, which is also one of the favorite question in this chapter. However, that should not be asked. Now they should not be asked because ESOP has been deleted. But they are asking. We do not have any other options. So ESOP, now ESOP means what? The equity shares will be allotted to whom? Employee. Once again at a price which is lower than market price. But right now it has not been allotted. An option has been given that employee can exercise, employee can purchase 1 lakh equity shares, suppose at rupees 25, even though the market price, average fair value is suppose 50. So this is ESOP. So similar to right shares, but right shares already issued and this will be issued. So this become potential equity shares. Right shares were ordinary equity share. Difference is that. Are you able to understand? Correct? Right shares was already issued. So it is ordinary equity share. This will be issued. So will be issued means potential equity shares. It is a contract with employee that they were entitled to 1 lakh equity shares in future. Now, in future, when some condition will be satisfied. When some condition will be satisfied, we need to wait for the condition. So right now, it is a potential equity share. Therefore, it will be considered for diluted earning per share. Understood this point? So right share was considered for basic earning per share. This will be considered for diluted earning per share. Difference you understood? Difference. Now in this, what our AS20 says that this 1 lakh has also two components. One which is issued at fair value and one which is issued at nil value. Now, how many shares are issued at fair value? That will be 1 lakh into 25 divided by average fair value is 50. Means can you say 50,000 is issued for fair value and balance 1 lakh minus 50,000 will be issued in future at nil value. At nil value. So what our AS20 says that any equity share which will be issued at fair value means any equity share for which entire consideration received, that will never dilute your earning per share because you have received entire consideration. So if you are issuing your share at current fair value, so that will never dilute your earning. But any equity share which will be issued at nil consideration, that will dilute your earning. Therefore, for diluted earning per share, only this will be considered. Only this will be considered. Have you understood this point? So first you need to split the option in two parts. One, equity share which will be issued at fair value. Second, equity share which will be issued at nil consideration. And this portion will be considered for diluted earning per share. Understood? Let me take one question. This, whatever question I am taking, that same to same question will come. They will not change the question. This question. A Limited had 6 lakh equity shares on April 1, 2007. The company earned a profit of 15 lakh during the year. The average fair value per share was 25. So they have given average fair value. Whenever they give average fair value, means it is a question of ESOP. Okay. The company has given a share option to its employee 1 lakh equity share at an option price of 15. So what is the option price? 15. So they can purchase the share at rupees 15 even though the price is what? 25. Calculate basic earning per share. Can we do? What will be the basic earning per share? What is the earning given? How much? 15 lakh, no? Divide by number of shares. So what is the basic earning per share? 2.5. Okay. Now, what is the total options they have given? 1 lakh. Now this has two parts. We will split how many shares are issued at fair value and how many shares are issued at nil consideration. This you need to do in working note. Don't write in exam in this way. Okay. So how many shares? 1 lakh into what is the option price? 15. And what is the average fair value? 25. So how many shares are issued at fair value? 60,000. So it means how many shares will be issued at nil consideration? 40,000. This 40,000 will be known as dilutive component. This will become your dilutive component. So this will be used only for diluted earning per share. So now your diluted earning per share will be equal to 15 lakh plus and 6 lakh plus. But what will be the number of shares? Okay, so we'll take 40,000 only. Understood? We'll not take 1 lakh, we'll take 40,000. And can you say ESOP is not entitled to any income? Therefore, your numerator will not be affected due to conversion of ESOP into equity share. Therefore, this will be always nil. So, options are not entitled to any income. Just debenture holders are entitled to interest income. Options are not entitled to any income. So, therefore, numerator will not be affected. So, what is your diluted earning per share? 2.34. This will be your answer. Understood? These are the 5 questions which they are asking. 5 types of questions. Means in AS20 they have not gone beyond this in exam. Understood? Now, take this question. One good question is there. Net, a listed entity as on 1st April 2001 had the following capital structure: 10 lakh equity shares having a face value of rupees 1 each, 10 lakh 8% preference shares having a face value of rupees 10 each. This is preference shares. If nothing is given, we'll assume cumulative. Okay. During the year 2001-2002, the company had a profit after tax 90 lakh. On 1st Jan 2002, Net Limited made a bonus issue of 1 equity shares for every 2 equity shares outstanding as on 31st December 2000. Bonus share 1 by 2. So 10 lakh 1 by 2 how much? 5 lakh. So 5 lakh is what? Bonus shares. On 1st Jan 2002, net issued 2 lakh equity shares of rupees 1 each at their full market price of rupees 7.60. So new equity shares issued at fair value. At fair value means current market price. Net limited shares were trading at rupees 8.05 per share on 31st March 2000. This is Bakwas point. There is nothing to do. Further, it has been provided at basic earning per share for the year ended 31st March 2001, which was previously reported at 62.30. The previous year earning per share they have given. Previous year earning per share they have given. Means we need to restate previous year earning per share because bonus share is there. You are required to calculate basic earnings per share reported in the financial statement of Net Limited for the year ended 31st March 2002, including comparative figure. So you need to restate also. They have said comparative figure. You need to restate previous year EPS. Explain why the bonus shares and the shares issuing full market price are treated differently. You should add a bonus share because. This I will explain. Okay. First, can you do it by row? You require my help. Try. Simple, huh? It is not difficult. I'll do. Bata. First, so can I say we need to calculate profit available for equity shareholders. So first numerator, bata, what is given profit after tax? They have given 90 lakh. From that we'll deduct what? Dividend, even though it is not declared, correct? Because we'll assume it is cumulative preference shares. Okay. So 1 crore into 8% how much? 1 crore into 8% how much? We'll do minus 8 lakh. So this becomes numerator. Numerator is how much? 82 lakh is the numerator. Okay. Correct. Now we'll calculate basic earning per share. Basic earning per share will be 82 lakh. What is the number of shares outstanding at the beginning? What is the number of shares outstanding at the beginning? 10 lakh. Okay. So 10 lakh into 12 by 12 will do. 10 lakh into 12 by 12 will do. Plus bonus shares. Bonus shares, how many bonus shares? 5 lakh. But the weight will be given for how many months? Weight will be given for how many months? 12 by 12, well, na? 12 by 12. Understood? Bonus shares. Then again they have issued how many shares? 2 lakh. But that was issued on 1st Jan 2002. So 1st Jan 2002. Weight will be given for how many months? 3 months. So 2 lakh into 3 by 12. So what is the answer? What is the answer? 5.29 is the answer. Now we need to find a restated earning per share previous year. Now they have not given earning, but they have given the previous year earning per share. How much previous year earning per share? 62.30. And we know the previous year equity share was how much? 10 lakh. Because that time there was no further issue, means bonus shares and the new equity share were not issued. So 10 lakh into this will be the total earning. The total earning will be 62 lakh. 10 lakh into 62.30. It will be how much? 62 lakh 30,000. 62 lakh. It was 6 crore. 6 crore, sorry. 10 lakh into 62.30. So it will be 6 crore. 6 crore 23 lakh. Correct. So the earning will be 6 crore 23 lakh and divided by will do 10 lakh into 12 by 12 and we need to give only the effect of bonus shares. So bonus share will also come into 12 by 12. Only this much na. So what is the answer? This is the restated EPS. already deducted now. That is the numerator. Earning per se is given. So earning per se, whatever earning was taken, that from that preference dividend was already deducted previous year. So why you will again deduct it? 41.53. What is the answer given? Check karo. 41.53. Done. Now this you can answer that because bonus shares are issued for consideration because they are issued for no consideration. Therefore, the weight of bonus share will be given from the beginning of previous year and previous year EPS will be restated. Only write down this much. Okay? We'll get the marks. You can see what the answer they have given. Okay? Understood. This is, you can do it by your own. This also, once you do not, this here, good question. Only one, if you not read the question carefully, you will do mistake. Let's say, suppose this question came in exam. If you will not read the question carefully, you will do mistake. Let's see how many of you are doing mistake. On 1st April 2001, a company had 6 lakh equity shares of rupees 10 each. Rupees 5 paid up by all shareholders, means partly paid up. Partly paid up means you need to find out equivalent number of fully paid up shares. On 1st September 2001, the remaining 5 was called up and paid by all shareholders except one shareholder who was nalayak, having 60,000 equity shares. So it means out of 6 lakh, 60,000 call money was not received. Means we have received only for 5 lakh 40,000 equity shares. The net profit for the year ended 31st March 2002 was 21 lakh 96,000 after considering the dividend on preference shares of rupees 3 lakh 40,000. You are required to compute basic earning per share as per AS20. Very simple question, have been asked in exam, but let's see how many of you are doing correct. Do it. Answer don't read now. If you are reading answer, then what is the use? Once again, why you will read the answer? Don't read. If you are reading, then it means you are exploiting yourself. Done. I know where you can do mistake. Chalo. 4.8 is correct. Chalo. Will I explain? The first mistake what you can do is that what is the profit given? 21 lakh. And how much preference dividend is given? So how many deducted preference dividend? No one has deducted. Deducted. This is the mistake. Those who have done for them, those who have done correct, okay. So they have given what? After considering dividend, means that is already deducted. If you have deducted, that is the first mistake. This is the first mistake. Second mistake, what you can do? I am explaining. Ki, what was the number of equity shares first? 6 lakh, and that was partly better. So 6 lakh into 5 by 10 into 12 by 12 will do. This is the correct. In this, no mistake. Then, how many shares has given call money? So, can you see, you will consider 5 lakh 40,000 shares. So, how many you will consider 6 lakh? So, that is the another mistake. Only 5 lakh 40,000. Okay? So, you will consider 5 lakh 40,000 shares into what? 5 by 10. And the third mistake, you will do mistake in counting. It is 1st September. I know. Because you are also married. Chalo. September, October, November, December, January, February, March. How many you take in 6 months? Dekho, I know. Because we are habituated of taking 6 months. But I say I know what you are habituated. It is 7 months. Understood? So there are 3 super easy question, but then also 3 mistakes. This happens in exam. Even though you have done this question now, it will not help you. In exam, concentration required. So in exam, every question new. Because that question you are doing in exam hall. I mean, right now you are relaxed. Na, jo hoga dekha jayega. But in exam, no, na. So same questions come in exam. High chances you can do same mistake. So it means high level of concentration on exam day. And so what are the mistake? It is 7 by 12. Now you'll get 4.8. Therefore, I like this question personally. And asked in exam 2-3 times of pakka asked. Same question with different amount. Okay. Chalo, my job done. Now in EPS, if you want any question to be done by me. Dilutive and anti-dilutive. Normally we don't expect this type of question at CA Inter, but last time they have asked. It is beyond our expectation. And normally I have seen CA Inter, they ask unexpected questions. CA Final, they don't ask. CA Final, they ask expected question only. CA Inter, they give, out of all questions, one will be always unexpected. So last time it was AS20. Correct? Now, what is this? Whenever we have more than one potential equity shares, how to find out which one is dilutive, which one is anti-dilutive? So what our AS20 says that any dilutive potential equity share will be considered for calculation of diluted earning per share. But if there is any anti-dilutive potential equity shares which will increase earning per share, that will not be considered for calculation of diluted earning per share. This is the concept. Okay. So let me explain first with one question only ki what they want to say. Okay, na? Suppose they have given profit from continuing operation. The profit from operation is 1 crore 64 lakh. Less dividend on preference shares is 64 lakh. Profit attributable to ordinary equity holder of the entity is 1 crore. This minus this will be 1 crore. Ordinary shares outstanding is 20 lakh. And average market price is given 75. Whenever average market price is given, it means there will be some question of, there is some point of ESOP. You can see potential equity shares, they have given option 1 lakh equity shares, 1 lakh equity shares with an exercise price 60. So in this, what will be my dilutive component? Remember last day, we said 1 lakh into 60 divided by 75. How much? How much? 80,000. So what is dilutive component? Will be 20,000. 1 lakh minus 80,000 will be dilutive component. Nil consideration. So out of 1 lakh option, 20,000 is dilutive component. Then we have convertible preference share 8 lakh shares with a par value of 100. Entitled to a cumulative share dividend of 8. So 8 lakh into 8 how much? And you can see they have already deducted 64 lakh. So thank you very much. They have already deducted 64 lakh. Each preference share is convertible to 2 ordinary shares. So what is the potential equity shares? 8 lakh into 2, 1 lakh, sorry, 16 lakh. 16 lakh is the potential equity shares. Then 5% convertible bond we have, nominal amount is 10 crore. Each rupees 1000 convertible bond is convertible to 20 ordinary share. Tax rate is 40%. So what is the number of potential equity share? 10 crore divided by 1000 into 20, how much? So it will be 20 lakh. 20 lakh. Check karo. 20 lakh. 1 lakh into 20. Understood? Now, whenever this type of question given, you can see there are three potential equity share. One is option, one is convertible preference share, one is convertible debenture. So, how to find out diluted earning per share, that we are discussing. So, first what we'll do in this, first we'll calculation. The first step is what? Calculation of incremental EPS. First we'll calculate incremental EPS. Incremental EPS means what? Increase in numerator and decrease in numerator due to conversion of potential equity share into equity shares. Correct? So what will be the incremental EPS that we need to find out? So numerator will increase by how much? Denominator will increase by how much? And what will be the incremental EPS we need to find out? So for option, can you say increase in numerator will be nil? Because options are not entitled to any income. But can you say what was our dilutive component? 20,000 already we calculated. So increase in number of shares will be 20,000. So in this, incremental EPS will be nil. Nil divided by 20,000, nil. But for convertible preference shares, what is the increase in numerator? 64 lakh preference dividend. Because now they are not entitled to dividend income. Now they will not be entitled to preference dividend. So earning will increase by 64 lakh. And denominator will be what? 16 lakh already we calculated. Number of potential equity shares. So this will be 4. This will be 4. Understood? And convertible debenture, what they have given, check karo. What is the interest? Interest will be 10 crore into 5%. How much? 10 crore into 5%? 50 lakh. And net of tax, so 60% will do. Into 60%, how much? So 30 lakh. Increase in numerator will be 30 lakh. And increase in denominator will be 20 lakh. That is the potential equity shares. So this will be 1.5. So this becomes your incremental EPS. Incremental EPS. Now to find out dilutive and anti-dilutive, what our AS20 says, that this will be ranked in most dilutive to least dilutive. So can you say the potential equity share with a higher incremental EPS will be least dilutive, because that will increase your earning per share. So this will be the most dilutive. This will be rank 1, then this will be rank 2, and this will be rank 3. We'll need to do ranking in this order. The most to least dilutive. So can you see, if the incremental EPS 0, that will decrease your earning per share, because that will not contribute anything to earning. That will not contribute anything to earning. So that become most dilutive. Most dilutive. Understood? That will decrease. Most dilutive means that will decrease your earning per share. But your preference here will not be dilutive. Means that will not be most dilutive. Understood? Because the incremental EPS is 4. Okay? So in this order, we'll try to find out dilutive and anti-dilutive. Now we'll calculate calculation of, you can say, basic and diluted earning per share. We write on numerator, denominator, and earning per share. First, as per basic, write down. As per basic. So what is the numerator? Already it is given. It is given 1 crore. 1 crore na? 1 crore. And what is the number of shares? Ordinary shares is how much? 20 lakh is given. Ordinary shares is given 20 lakh. So EPS is what? 5. Understood? Now, first we will consider option for calculating diluted earning per share. We will give the plus effect of option effect of option. So your numerator will increase by 0 and your denominator will increase by 20,000 na? 20,000. So this will become how much? 1 crore. And this will become 20 lakh 20,000. So now what is your earning per share? This by this. $4.95. So because it is decreasing, this become diluted earning per share. So we'll consider it. Then we'll give the effect of what? But I will give the effect of convertible preference shares or convertible bond. We'll give the effect of what? Convertible debenture. So we'll give the effect of convertible debenture. So that is 30 lakh increase in numerator and 20 lakh increase in denominator. What is the total now? It become 1 crore 30 lakh and this become 40 lakh 20,000. Now what is the EPS? 3.218. Still decreasing. So this will become your diluted earning per share. Understood? Correct. The last will give the effect of what? Convertible preference shares. So this will increase by 64 lakh and this will increase by 16 lakh na? 16 lakh. So this will become 1 crore 94 lakh and this is 56 lakh 20,000. Now what is your earning per share? It's not 2 point. 3.45. Now you can see increasing. So this is not your diluted earning per share. It become anti-dilutive now. So your diluted earning per share will be 3.218 and your basic earning per share will be 5. This is the answer. Answer understood? Have you understood the answer? So once it is increasing, that will not be considered. So you need to consider the worst EPS. So what is the worst EPS? 3.218. So that become your diluted earning per share. Understood? This was the last exam question. If you want, now I can do that. You want? You can do it. I will solve it. I'll just inform you what they have done. I will not do that. Don't worry. This was the only paper, na? What was the question number? यही क्वेश्चन है ना? हाँ. So you can see XYZ has provided you the following information. They have given profit after tax. Number of shares outstanding is 8 lakh. Average fair value they have given 25. Weighted average of option given 80,000. Exercise price. So can you give me what is the dilutive component? You will do 80,000 into 20 divided by 25. How much? 64,000. 80 minus 64. So 16,000 is dilutive component for option. Okay. Then 12% debenture of ₹100 each. Each debenture is converted into 4. So what is the number of potential equity? 30 lakh divided by 100. How much? 30,000 into 4. How much? So 1,20,000 is the potential equity share for debenture. In this they have not given preference shares. The company issued 1 equity share as bonus shares for every 5 equity shares outstanding as on 1st October 2003. It further issued 2 lakh equity shares of ₹10 each as on 1st Jan 2024. The financial of the company and on 31st March 2000 each year you are required to calculate. So first you can calculate basic as it is. So basic what they have done, let's see. So calculation of basic earning per share. So earning they have given how much, check karo? 31,20,000. So that will be only earning. So 31,20,000 is the earning. We need to find out number of shares. The number of shares let us calculate. So it is 8 lakh. Bonus share is how much? Bonus shares for one equity share 5. So 1 by 5 how much? 8 lakh into 1 by 5. So 1,60,000. Weight will be given for entire 12 months. So that will be 1,60,000. Then additional 2 lakh equity share issued on 1st Jan. So weight will be given for how many months? 3 months. So 2 lakh into 3 by 12, how much? So total is coming how much? Batao? 8 lakh? 10 lakh? 10 lakh 10,000. So how much they have taken? Oh, sit here. That was rupees. अच्छा, they have given rupees. Oh, चलो ठीक है. उल्टा हो गया. This is 80,000. So this will bonus share will also change. 16,000, and this will be 2 lakh. This is the 2 lakh na into. So 2 lakh into 3 by 12. 50,000. Now total is what? How much they have taken? Oh. The last day actually I have read. Okay, चलो ठीक है. जरा मुश्किल हो रहा. Very good question यार. Actually last day I have read, but today I have not read fully. So it is closing number of shares 8 lakh 80,000. Correct. Bonus shares यहाँ पर they have issued 2 lakh again. So this is the 8 lakh. Then to wrong. Then to this with number of shares only. Question is totally confusion. ठीक है. चलो. And how they have calculated this? Total dangerous. How they have calculated 6,50,000? Acha, they have done back calculation. That they have done back calculation only. So it is back calculation they have done. They started with 5 lakh. Okay. So 8 lakh. This they have considered 8 lakh. Number of shares they have considered. 8 lakh minus 2 lakh, 6 lakh. 6 lakh is now including bonus shares. So 6 lakh will be what? 6. So how much is 5? That is 5 lakh. So opening number of shares become 5 lakh. Now weighted number of equity shares 5 lakh plus 1 lakh is the bonus share plus you will take 2 lakh into 3 by 12. Now check how much it is coming. Now it is coming now. So 6,50,000 is coming. Okay. So this become basic earning per share. Basic earning per share you calculated. Now let us come to diluted earning per share. Now they have calculated incremental number of shares. Okay. 12% debenture, increasing profit. But they have done in that way only. Of course, option will be the rank 1 and debenture will be rank 2. समझ लो that incremental EPS you can calculate. So option will be rank 1 and debenture will be rank 2. Now they have done in that calculation only. So earning is what this? This is basic. So this become your basic earning per share started with 4. The number of shares under option, this will be 0. And number of shares under option already we calculated 16,000. So they have added this, it become 4.68. Then they have done same for debenture interest income and number of shares, and this is coming 4.29 because both are decreasing. This was how much? 4.80. So both are decreasing, therefore you diluted earning per share 4.29 and this will be what? Basic earning per share. This is the solution. In this only. MCQs, bata. Which question? Case 1, 2, 3. What he said? Case scenario. This one is black limited. Black Limited received government grant of 15 lakh for acquisition of a machine costing rupees 50 lakh. Grant is 50, this is 50. The grant was credited to the cost of machine, means they have deducted grant from the cost price of machine, means second option. The life of machine is expected to be 10 years. An estimated residual value at the end of the year is 5 lakhs. The company charged depreciation on SLM basis. Due to non-fulfillment of certain conditions, the company had to refund the entire amount. On 31st March 2023, Black Limited received certain indication of impairment of the machine, and the recoverable amount is ascertained to be 28 lakh with a revised useful life of 4 years and nil residual value. On 1st April 2004, the company exchanged the machine by paying cash of rupees 2 lakh and new machine. Oh, they have given AS12, AS28, then AS10. Chalo, but easy only. Okay. First apply means as per the question you to apply. First AS12, then AS28, then AS10. So what will be the carrying amount of machine as on 31st March 2021 after charging depreciation for the year? So they purchased machine on what? 1st April 2019. What is the cost? Cost will be 50 minus 15, how much? 35 lakh. 35 lakh is the this. And the refund happened on which date? Refund happened on 1st April 2021. They have asked before refund. They have asked before refund. Means before refund, what is the carrying amount? So useful life is 10 year. Residual value is minus 5. So minus 5 divided by 10, how much? 35 lakh minus 5 divided by 10. 3 lakh. 3 lakh. So for 1920, depreciation is 3 lakh. For 2021, depreciation is 3 lakh. So 6 lakh, 35 lakh minus 6 lakh, how much? 29 lakh. So option number D is correct. Option number D is correct. First one, you got 2 marks. Now, what will be the amount of depreciation of next year? So next year refund happened. Next. So 29 lakh was the carrying amount. Now can you see if the refund happened? So initially it was credited to asset account. Now refund will be debited to asset account. Your value of asset will increase. So what was the amount of government grant? 15 lakh. So 15 lakh will be added. So 15 lakh will be added at the beginning of the year only. This become how much? 44 lakh. Now what is your remaining useful life? 8 year. And residual value is how much? 5 lakh minus 5 lakh divided by what? 8. What is the depreciation? 487,500. So can you give me 44 lakh minus 4 lakh 87,500? What is the carrying amount? 39 lakh 12,500. 12,500. Understood? Correct. Now what they have asked? What will be the impact for the test of impairment? Now we need to understand when the impairment has been done. The impairment has been done in the 31st March 2023. So this was the carrying amount on 31st March 2020. So 1 year more depreciation will charge. 1 year more depreciation. So because it is SLM, the same depreciation will come. What is the amount of depreciation? 4,87,500. What is the carrying amount? 34 lakh 25,000. This becomes the carrying amount. Now we need to find out recoverable amount. So recoverable amount is given in the question. What is given? Recoverable amount is 28 lakh. With revised useful life is 4 year. So revised useful life is for next year depreciation. So 28 lakh compare karo. So what is the 28 lakh compare recoverable amount? What is the impairment loss? 6 lakh 25,000 is the impairment loss. So what they have asked, what is the impact? Impact is what? Point number C. Impairment loss of 6 lakh 25 that is debited to PL account. Option number C got. Now next, what will be the amount of PL on exchange of machine on 1st April 2024? So we have done impairment on 31st March 2023 and means 1 year again we need to charge 1 year depreciation after impairment because this is 31st March 2023 now, and exchange done on 1st April 2024. So we need to find out 31st March 2024. We need to find out carrying amount. Once again depreciation. So what they are saying, now the residual value becomes 0 and the revised full life is 4 years. So what is the next? 28 lakh is the carrying amount. 28 lakh is the carrying amount, revised carrying amount, divide by 4. What is the depreciation? 7 lakh. So what is the carrying amount? So 21 lakh is the carrying amount. So what is the carrying amount of asset exchange? 21 lakh. So old machine was exchanged with new machine. So what they are asking? Check karo ki on first step the company exchanged the machine by paying cash of 2 lakh and new machine valued at 18 lakh. So they have not given the fair value of old machine. They have given fair value of new machine. So what is the first? If they what they have asked, first check karo. What will be the amount of PL? So ठीक है, we need to pass journal entry. But what is the cost price of new machine? What is the formula? Fair value of asset given. I'm not given. Not given. The fair value of asset received. What is the fair value given? So that becomes the cost price of new machine. So what will be journal entry? New machine will be debited with 18 lakh. Old machine will be credited with the carrying amount. Carrying amount is how much? 21 lakh. How much cash paid? Cash paid na? How much cash paid? 2 lakh. So to bank how much? 2 lakh. What is the loss? Loss is equal to how much? 23 minus 18. How much? What happened? Something wrong we have done? Something wrong we have done? On 1st April 2024, the company exchanged machine by paying a cash of 2 lakh and a new machine like is paid. What is the answer given for this? Last one is answer is what? Loss of 3 lakh. अच्छा देखो, it means something is the concept also, correct ना? तो देखो, one thing more point I am saying about MCQs. MCQs में what should be your process? देखो 1 second, your objective should be what? कि there are 15 questions, minimum 30 minutes, maximum 45 minutes, not more than that in MCQs. I am saying maximum when you are thinking yes you can do it, then only 30 minute cross, then think whether you know, you don't know. If you don't know, leave it. So 30 minutes is target. 30 minutes you give to MCQs. Now whether you want to give initially, at the end, in the between, that you decide. ठीक है ना? Some teachers say initially, some teachers say. So I will say apply your own judgment, right? You are only the person who will solve that. I will say do at the end. At the end time will not be left. Descriptive में time गया. You will not be able to come back. Correct? So I will say 30 minutes need to be given minimum. Maximum how much? 45 minutes. Now out of 50 now, from my point, 10 MCQs you will be able to do it, for which you know answer. So 10 MCQ will be फटाफट हो जाएगा, but 5 you will be not able to solve it, and you'll try to waste your time, and they want that only. In this though, everyone means I will also waste. Emotional हो गया कि why I'm not getting answer. One answer got, second and third, fourth में क्या हो भाई? So I will say leave it. Leave it. 2 marks is important, 10 marks question is important. So I will say if you think you can do it, you can solve it, try it, otherwise leave it. And how you should leave? Suppose there are 4 options, A, B, C, D. So now you have fighting with 2 options. So just keep